We are currently one day out of the US election at the time of this recording. I wanted to come on here and give my thoughts on the US elections and moving forward in terms of the stock market and a few other assets. So without further ado, we're going to start off by looking at gold. So if we actually zoom out here on the daily time frame, you can see how well gold has been performing recently in a very strong uptrending market. Now, this is probably the asset that I have been asked the most about. Do I think we're going to continue to go higher on gold, or do I think we're going to see a pullback, or what are my thoughts on gold? Now, me personally, I am already looking to swing long gold, and there are very obvious reasons for that. So, gold and basically any other metal, so that is gold, silver, platinum, and even Bitcoin, is generally looked at as a safe asset during uncertain times. So, whenever we have uncertainties in the world, for example, the geopolitical tensions that we have right now in the Middle East and in Asia now as well, also the US elections also just cause a lot of uncertainty between investors. And when these investors sense that there is uncertainty in the world and in the market, they look to place their money elsewhere. And generally, that is in gold, silver, platinum, and Bitcoin. So, again, because of the uncertainties that we are having right now in the world, I am expecting gold to continue to go higher for quite a while. And I think no matter who gets elected in terms of the presidency, gold is going to continue going higher. Now, personally, I do think gold will benefit more from Donald Trump being elected than Kamala Harris. But even if Kamala is elected, I do still think that gold is going to continue going higher. I have the same sort of thoughts on silver, although I'm not as confident in my silver analysis. I do still think that silver is going to continue going higher. So taking a look at gold, this is where I am potentially interested in getting a long position rolling either there or at the 0.618. This is my classic continuation model when I have a reason to believe that price is going to go higher. I use this intraday as well. When we have an uptrending market, which we do here on gold, the easiest way to predict where a pullback is going to end is typically anywhere between 0.5 and 0.618. And that is exactly why I'm interested in taking a long position from either one of these zones, depending on the reaction. Now, right here, we also have a bullish mitigation block, which is just a fancy word for previous structure. And so I have a technical reason to long this area, and I have a fundamental reason to long this area. Again, gold also benefits from rate cuts, and with the last FOMC, we got introduced to a 50 base point rate cut. Now, we have a strong reason to believe that we are going to have another 25 to 50 base point rate cut with the next FOMC, because that's what Jerome Powell has been hinting. So if we are going to see another rate cut and even more rate cuts to come, well, then gold and all the other metals are simply going to benefit from this. And that's another reason for those assets to continue going higher. That's not only gold, by the way, also Bitcoin, benefits a lot from these rate cuts. So if we are going to continue to see these rate cuts happening, well, then these assets are going to benefit a lot from it. When I'm swing trading, my stop loss is typically going to be a break of structure. So that means that I will long gold from anywhere these two areas, and my stop loss will probably be this low here or a daily candle closure below that low. Now, when I'm swing trading, the way I'm planning to swing trade gold here, I don't actually have a take profit because I don't have any previous data to take my profit at. That means that I will use fundamental reasons and obviously also technical analysis along the way to take my profit. That could be a break of structure in the future somewhere up here that could cause me to want to close my position, or we could get some news that obviously I don't think is beneficial for gold, and that could cause me to close my position. So when I'm trading intraday, I typically like to use highs and lows or any other type of liquidity or inefficiency for my take profit. But when we are trading at all-time highs like we are at gold and I'm planning to swing trade it, I don't have any data to back up why I should be taking my profit here or there. So looking at silver, it's sort of the same scenario as on gold. I have reason to believe that silver is going to go up fundamentally, which we just went over. I also have reason to believe why somewhere around this 32 level could be a point of reversal for silver as well as gold. Now, again, utilizing my Fibonacci extension tool, if I draw it from the most recent swing low to the most recent swing high, you can see that the 0.618 level overlaps very well with the gap fill of this large daily inefficiency. Now, not only that, if we take some retail into perspective, you can see that price has bounced from this area quite a bit in the past. And if we want to get even more technical than that, we actually have a breaker block overlapping with that inefficiency as well as the 0.618 level that I was just talking about, which we can see right here. So again, I have a lot of reasons to believe that silver is going higher, both fundamentally and technically. Now, a lot of people will ask me, why do I use a fundamental analysis and technical analysis? Well, when I'm trading my swing trading accounts, fundamentals are extremely important for me to be able to figure out where price is going. So fundamentals are great for figuring out where price is more likely going to go and basically just giving me a bias on a certain asset, although it's not super great for timing. And that is when I use my technical analysis, because technical analysis is great for timing, but not as great for direction on the higher time frame. So combining the two is the ideal scenario when you're talking about trading the higher time frame. And again, that's exactly what we're doing with gold and silver. Now, they are almost the same. If gold is going to go up, well, there's a high chance that silver is going to do the same thing. Again, because these are safe assets, and they're assets that people tend to invest in or believe in when there's uncertainty in the market, which obviously drives price higher. And again, what causes uncertainty in the markets? That could be geopolitical things such as a pandemic or wars or an election. All these different things will cause uncertainty and cause investors to put their money in gold, silver, platinum, and again, even Bitcoin. Now, taking a look at the S&P 500 here, you can see that we have equal lows made right here. And if we jump to a weekly time frame, these are equal lows created inside of a weekly imbalance, and they fail to fill that imbalance. So from a purely technical point of view, this is a point in price where we are very, very likely going to reverse. Now, again, we are getting very close to the election, but I think personally, no matter who gets elected, this is going to be bullish for the stock market, at least longer term. And if there's anything that the stock market really likes, it is certainty. And if there's one thing that is certain, that is that the overall world, or at least the US stock market, becomes a lot more certain when a president is elected. So it doesn't really matter whether it's Trump or Harris that gets elected, because no matter who gets elected, it still causes more certainty. And again, when there's more certainty in the market, well, then that attracts investors, and that is going to boost the price of the S&P 500 or the NASDAQ, because people are way more likely to actually want to put their money there. So in terms of technical analysis on the S&P 500, again, my first point of interest is going to be these equal lows that we have right here. Again, that could send price higher, and I'm actually long right now on the S&P 500, but my size is lowered. Now, why would I lower my size if I am confident that this asset is going to continue going higher? Again, we could see pullbacks. It's still uncertain. We have elections. And even though I have a strong belief that this could go up, there's still a chance that it may go down. And I have another technical point of interest, and something that I've done and will continue to do if I have 2 points of interest is I will always enter on my first point of interest with lower size. If we then end up losing that first trade off of that first point of interest, that is completely fine, because again, my risk was lowered, and then I can enter on the second point of interest with my normal risk parameters or risk approach. So where's my second point of interest? Again, my first one is going to be these lows. I think this is a point in price where we could reverse and just see higher prices, which is why I entered a long position with low risk right here. Now, my second point of interest will come from the Fibonacci extension tool off of this swing low right here. I do think that that the market does have a chance to come down here before reversing, but again, I would really appreciate it if this low could stay open. In terms of technicals, I don't want to see this low get ran by the S&P 500, which is why I am either going to anticipate a reversal off of this low here, or off of the 0.618 or the 0.706 or the 0.79 Fibonacci extension tool zone. Because again, going on a weekly time frame here, you can see that the S&P 500 is in a very clear uptrending market. And again, as I just said, when you have established a clear trend in a market, well, then the pullbacks are often going to end either at the 0.5 of the range or at the 0.618 of the range. If we take a look at the previous structure of the S&P 500, you can see that this pullback right here ended at about 0.5% of the range. Now, right here, this pullback obviously left this low alone, which we're going to anticipate that this pullback is going to do with this low as well. And as you can see, it ended up bouncing pretty well off of optimal trade entry right there as well, we can take a look at the structure right here. And as you can see, it ended up bouncing right around 0.5 and 0.618. So when we have established a trend within a market, again, the pullbacks are going to have a very high chance of ending or putting in the low between the 0.618 and the zero point 0.5 Fibonacci extension tool, drawing it from the last pullback to the most recent pullback. And so I'm using that same analogy right here, obviously combined with fundamentals as well. Now, if we take a look at seasonality on the S&P 500 during election years, November and December are historically bullish months after the election, no matter what president was elected. So on average, the S&P 500 did about 1.5 something percent in November and sort of the same in December, which means that they are historically bullish months. And historically, we should put in the lows sometime here in November, which is why I am interested in longing this area here or this area here. So that is kind of my thoughts moving forward from the election and some potential swing trades that I'm looking to trade. And again, I'm already long the S&P 500 from this area here. Lower risk, of course, but I really hope that this helped you out, and maybe you were confused about the election and should we trade, should we not trade, what can we expect? This is exactly what I'm expecting, and again, yes, it is risky trading the elections, but again, this is a swing trade that is executed on the weekly time frame. The gold one and the silver one will be swing trades as well, executed on the daily time frame. So you can't really compare it to intraday trading. Obviously, the economic data like CPI and NFP and even the election is going to matter a lot when you're talking about intraday. But when you are executing on a weekly time frame, well, then the economic data is not going to do a whole lot. My stop loss is so large because, again, it's executed on a very high time frame that it allows for this economic data to be included in my trade position and still having or keeping my stop loss safe. And in terms of Bitcoin and crypto, I think the exact same thing for crypto. Obviously, it's going to be way more beneficial for crypto if Trump wins. Trump is very, very pro Bitcoin and crypto in general. His vice president is also very, very pro crypto. So again, I think that a Trump win will be a lot more beneficial to crypto than a Harris win. Now, that does not mean that if Harris wins, I am expecting a bear market in crypto. All it means is that I personally believe, for obvious reasons, that it is way more beneficial for crypto if Trump ends up winning. So again, thank you a lot for watching. Let me know if you want these videos in the future, because I do, even though you guys don't see it, I do also swing trade. Most of you know me as a day trader or an intraday trader, which is also something that I do most days. But again, I do have swing trading accounts and I do know how to use fundamentals to my advantage. So if you enjoyed this video and you want more of it, let me know in the comments. And again, thank you a lot for watching, and I'll see you in my next video.